Hey, it's Tyrone Jackson from thewealthyinvestor.net. Thank you for joining me for this very special video on trading versus investing. Trading versus investing. You see, in the media, when you're looking at Bloomberg or CNBC, sometimes throughout the day the term trading stocks is used, and sometimes throughout the day the term investing in stocks is used. And what I want to do is see if we can add some clarity to trading versus investing. When we're investing in a stock, we're looking at a longer term view, right? So, for example, this is American Express, it's a Dow component. If you're in the Wealthy Investor Program already, you know how much I actually love long term dividend paying stocks, especially Dow components like American Express. So I want to give you some criteria. You see, it closed up here today. We're in the month of April, and it closed up, it had a good day. But you look at this 5 year picture. How do you know if a stock is worth your time? Well, you look at a picture first. And I always say in the Wealthy Investor Program is that we don't marry stocks, we only date them. And if you really want to be successful in the stock market, buy stocks that have a tendency to rise. Well, look at American Express here. A picture's worth 1,000 words from 2010, right, to 2014. Does the stock actually have a tendency to rise? Yes, it does. Now, this is telling us that the stock looks like a great investment. A, of course, it's a Dow component. We know it's stable, and the revenue is there to force the stock price to rise. Now, I'm not saying to you in this video you have to go out and buy shares of American Express. It's simply an illustration of a stock that has performed well over time. You'll notice it also has something down here called a dividend, and that dividend right now in American Express is 92 cents annually. And if we divide that by four, because your dividends are paid to you as a shareholder once every 3 months, that would be 22 cents per quarter per share. Okay. Now, I always encourage people to have their dividend checks sent home to them. Don't put them in your account to reinvest them, because dividends down here are a form of what? Residual income. And in the Wealthy Investor Program, we're all about as much dividend and covered call premiums as we can collect every single month, because residual income is really what you need in your life. Although they keep telling us in school that we should go out and get a job, but if you had $10,000 of residual income coming from the stock market every single month, you may experience a certain measure of financial freedom. All right, so that dividend is really important. I'm going to get back to that in a second. Why is it? What does it mean to invest? Invest means you're going to put some money, let's say down here. If you had bought the stock when it was, let's say, $22 a share, right? You see where I'm pointing down there, about 4.5 years ago? $22 a share, and you bought 100 shares. That would be a $2,200 investment. The question is, how much would that $2,200 investment be worth today? I'm going to do some very simple math. It would be worth $8,740. $8,740. All I did was take 100, if you bought your shares down here, and multiply them by the current share price. Now, if you had a little bit more money down here, you could have bought 1,000 shares, right? And if you had been investing for a while, 1,000 shares at $22,000 today would be worth $87,000. Now you see, in a period like 4 years, 4 to 5 years, how some people build wealth in the stock market because that's an investment. Now, there's some other strategies that I go through in the Wealthy Investor Program that help increase that wealth. And if you're already in the program, you know we should be buying more shares as the shares move up, and we have what we call established buy signals. Now, by contrast, I want to point to something like eBay. Look at this is eBay. Right now, eBay, 5 year chart, does it have a tendency to rise? Yes. By the way, this section down here would be a dip, and some professional investors say this is a investing opportunity. So you want to own the stock when the market is sliding, so that when it pops up, or this is called retracement actually, when it starts to retrace, you participate. But let's just say on eBay, for example, you had gotten 100 shares. Let's say higher. I don't want to start down here at 15 because that's like cheating. Let's just say hypothetically you got them at 20. Not their lowest price down here, but around here at $20 a share. Well, 100 shares would be a $2,000 investment in eBay. What would those 100 shares be worth today? In about a 4 year period, it'd be worth $5,469. Now, this is how you invest in the stock market. You choose stocks whose story you understand. In other words, how does eBay make its money? What's the size of the float? What's their top line revenue? These all come along with getting a financial education. You see, picking good stocks, or as we say in the Wealthy Investor Program, picking good dates, is not really hard when you have an established discipline. So we know that $2,000 would a $2,000 investment would be worth over $5,400. A $20,000 investment would be worth $54,000. Now, you'll notice if I scroll down here, there is no dividend. You see where it says down here? There is no dividend on eBay. That's because the company, rather than returning money to shareholders, has chosen to do what? Invest that money back into the growth of the actual company. So the only thing that you get here as a shareholder, you don't get a quarterly dividend check. You get a stock that has a tendency to rise because they're still building out eBay. Now, I want to point something out here as it relates to risk. eBay is a non-Dow component. American Express is a Dow component and it pays a dividend. And where there's dividend, there's something called yield. Institutions who are also investing in the stock, they love this dividend. And when that dividend is there and they get a form of residual income, guess what? They tend to hold on the stock and it tends to be very stable. You notice we don't see like a wild pullback here or earlier back here in 2010. Now look at eBay, right? It can be, this is called volatility for those of you who recognize what volatility looks like in a picture. If we're cover call writers, by the way, we love this volatility because it causes your call premiums to swell. That's called a volatility swell, high implied volatility. But if you're just investing in the stock, you see how this looks sort of kind of like mountains, and technicians have a term for all that. I tend to teach from the Sesame Street version, by the way, so I don't use a lot of complicated language, not until you become a little bit more sophisticated. eBay makes a good investment, but it's going to be a wild ride. The value of your shares are going to go up and down and up and down. When you're investing in a stock that pays a dividend, if the stock has good earnings, that rise will be a lot smoother. So, what do I want you to know is that if you're investing, you may want to look at stocks that pay a dividend consistently, right? If we were trading, could we trade American Express and eBay? And the answer, of course, is yes. A trade would be something like buying the stock and selling it when your shares move 25 cents or a dollar or $1.50 and pocketing the difference. And a good stock to trade is one that's very volatile. You can get in and get out and get in and get out. So, how long does a trade last? A trade can last one day, it could last 3 days, it could last 3 months. An investment is something that you're doing for the longer term. So, just in summation, what am I sharing with you tonight? Well, both these stocks make good trades, they also make good investments. But eBay's volatility allows us to buy and sell the stock and buy and sell the stock with a little bit more frequency than American Express, which is more of a smoother ride. Although some institutions buy 1 million shares and they sell it when it goes up 25 cents, they're also trading. Final point I want to make. Can you be a trader and an investor in the same stock simultaneously? You can. When we get to taxes and things like that, it becomes a little bit more complex, but you have to decide. I find that for my students, we decide if we're going to trade this stock or if we're going to invest it and buy more as it rises, although you could do it for both. Okay? All right. So I just want to share this with you. Sometimes people say, oh, selling is bad. But you know what? I always say to my students, if I sell you something and you make more money, you make two, three, $4,000 a month. That's a pretty good deal. So sales is not a four-letter word, but I do want you to know that at thewealthyinvestor.net you can purchase the Wealthy Investor's Guide to Stock Market Success, which takes you into more detail about how to trade, how to invest, how to sell covered calls, how to collect your dividends, right? And it's right here at thewealthyinvestor.net. Or you can download my free ebook, which I highly recommend. And I think you would find some value in that because I'm not the person who teaches from a very, very complex point of view. I prefer to keep things simple. That way you get them. This is all about getting a financial education. Whether you are trading in American Express, trading in eBay, you do need to be taught how to trade in the stock market, and you should know that all wealth is taught. I'm going to do another video coming up soon on how to open a brokerage account with $500 or less at E-Trade, Schwab. What should you look for? It's all in an effort to help you. I'm Tyrone Jackson, the Wealthy Investor. Please subscribe to our YouTube channel, and I hope this video has helped you create great and positive things in your life.